Hey, welcome to the Closing Beat, everybody. Happy Thursday to you. How you doing out there? All is good, I hope. Welcome. We are financial advisors here at Jazz Wealth. We do things a little bit differently. We like to teach along the way, and sometimes we give you a hard time. Had to give somebody a hard time today because they were trying to do something. They were trying to invest their money in something they had done no research on. So sometimes it's got to be a little tough on you. But while other advisors are playing checkers, we are playing chess. One great example of somebody that I was rather proud of for asking this question. They needed some money, and we figured out a way to do a 401k loan, then use the IRA as a way to pay or accelerate the payment on a 401k loan and actually lower their taxes at the same time. You wouldn't think you'd be able to do that, but after a little tinkering and playing some chess, we figured it out. I love that. So they made money on the advice, and they made money by borrowing money. Awesome. Love it, the whole thing. Hey, tonight we're going to teach you more. Every Thursday we do a class called Wine and Wealth. It'll be Whiskey and Wealth tonight, or maybe Water and Wealth, you know, just trying to keep things a little more healthy, do my thing there. But if those of you that are about to retire, right, you're right in there, we're going to talk about the exact steps. What do we need to do? I'm going to share nest egg. We're going to go through everything. Or what do we need to focus on? What's important? It's an emotional time. We'll do all of that. And last week we did some personal finance discussions as well. All right, let us get started here today, shall we? Okay, so there are, well, first of all, I owe Cody, here's, do this thing. I lost the bet, right? I lost the bet. What was it, $10 bet? All right, can you break a 5? No? There you go. Oh, wow. All right. So there we go. Had to pay Cody there. So he wins the bet there on the ETF thing. There are, unfortunately, a bunch of, I don't want to say it that way. There is an unhealthy amount of idiots that run our legal system and our financial system and our political system as well. But that's not the real discussion today. I get to talk about that today, because there are now Bitcoin ETFs. Remember, Bitcoin is literally nothing. It's nothing. There's nothing there. You can't spend it. It doesn't make financial sense to spend it. Horrible thing. So the Bitcoin ETFs are only good for one type industry, right? And that's the people that put those things out there. Because now you get to pay them a management fee for something you could just do yourself anyways, right? And so that really sucks, to be honest there. That was the real announcement, right? Because the SEC got sort of hacked. Their X account got hacked. Come to find out, they don't use two-factor authentication on their Twitter account or their X account. Do we say X now? It's just X, okay. So they didn't use two-factor authentication. Somebody got in there and pre-tweeted that, but turns out, yeah, you can have the ETF now there. Kind of frustrating, all the stuff they make us do, and the SEC doesn't even use two-factor authentication. Anyways, the SEC, to me, did a decent job here, because even though they approved it, the courts kind of made them approve. If you really look into how this was going to go down, they sort of forced their hand. The SEC said, hey, we don't approve of Bitcoin, so be careful to the average Joe out there. The courts genuinely won this one. But please, please ask yourself, what in the world am I investing in? If you use a Bitcoin ETF, Bitcoin futures, buy it directly, use one of the other coins, it's nothing. You are buying nothing and hoping that at some point a bigger and better fool will buy nothing from you at a higher price. And if you do, remember, it's an asset, so you're going to pay capital gains on that. There is literally no need for that in the world. It will not be a part of what we do here at Jazz Wealth, none of it at all. So if I've insulted you in some way, we just won't be a good fit, because to me, it is a ridiculous thing to invest your money in. Enough said? Enough said. I got that question so much today, and I'm like, tell me why you want to invest. Go ahead, tell me. What's a good reason to buy the ETF? Well, it's doing well. I'm like, it did well. You're buying something. I'm like, just give me the money. I'll do well. I'll tell you I'm doing well. It's just, at least there's something. There's somebody there. Oh my God. Okay, the other thing that came out was inflation here today. Nailed it. I like that. We talked about inflation growing at 0.3% month over month. That's how you would actually look at it. So we came to 3.3% as the headline number there. So that was actually spot on. I was a little bit shocked because if you look at the market's response was actually to the downside on that. I assumed that, like we talked about the other day, people would understand the way inflation is calculated and how just the law of averages, right? The average 12 months ago was higher than now, so naturally it was going to tick up a little bit. But apparently that wasn't the case. We started off actually kind of weak. The bond market responded. It was like nobody really planned that one out there. I thought they had figured that out. That's okay. Where we were right, let's see, rent was down 5.5% as predicted there. I missed on airfare. Airfare was only up 1%, so missed on that one. And used car prices were up 0.5%. Let's talk about that for a second. Because why do we look at this economic data? Just for fun? Just to take guesses, right? No, you can get stuff out of it, right? From an investment level. So think about this. We know, and you can see, you can look it up yourself, that auction prices are lower. We now know that used car prices are up 0.5%. It's not a lot, but it's up 0.5%. What does that tell you? The dealers, people that sell cars, their profit margin is a little bit wider because they bought the cars cheaper wholesale. They're able to sell them a little bit higher for retail. That wasn't the case before. So that's actually good news for the car sales companies there if you want to look into things like that. It's not an amazing rally, but it's a little bit of an increase in price there. So that's pretty cool. All right, the S&P sits itself right here at highs. A little bit of a weak start to the day, a decent midday rally that took us back to essentially flat. Not too much to report on after that. The attention all day was basically on Bitcoin, which is in fact falling now even more. You've got the NASDAQ doing the same thing. The big tech stocks actually started with a little bit of a sell-off. If you look inside, if you look inside of that, and more importantly, the S&P, if inflation is higher, like it is, like they said, inflation's higher a little bit, and the economy's strong, that's the economics sort of conundrum that we have right there, then the assumption is rates can either go higher or remain higher, right? That's like that just saved you watching 20 minutes of financial news, right? Inflation's higher, but the economy's still strong. So the Fed can say, oh, well, we'll just leave rates higher. Or maybe we'll take them a little bit higher. Less likely scenario there. So if you want to verify that, you look inside of the S&P and you go, ooh, utilities were down today. They stood no chance at that afternoon rally. There was nothing that happened there. Well, and that's because they really kind of thrive and would like to have lower rates. So if the inflation is higher, the economy is still strong, that means there's no need for lower rates. That means that this rally in utilities, this rally in some of the other areas of the market, healthcare actually did okay. Real estate, oh man, it means that that's now kind of an overpriced thing. So it's a little bit tricky when you're looking there. Also, with that same assumption, you get yourself a little pullback in the small caps as well. I like that. I'll take a pullback in small caps. I think that's pretty much, welcome for anybody there. But with inflation higher and a stronger economy, rates don't really need to go lower, right? Because you guys don't care. That's essentially what we learned today. Things cost just a touch more. Not a big deal. They cost just a touch more. But you're still spending. So you don't care that they cost a touch more. Therefore, the Fed says, well, why would we lower rates? We don't need to make it easier on people. Right? So really pretty cool. Pretty cool lesson there. Okay, moving around the rest of the markets. You got bonds wiggling around here today. The price is moving just ever so slightly higher. It was kind of a volatile day for bonds. The price of oil moving ever so slightly higher. Wasn't much exciting to report. Gold, not much exciting to report there. And so on an individual level, you got some stocks to take a look at. So we'll do that. We'll take a look at some stocks and then take your questions. By the way, Haley's got a channel, a Doe Straight channel for people that are younger. So if you want to get some help, financial advice, or learn from her with the kind of tips and tricks that are more important to you guys, go check that out. All right, there we go. All right, Hertz is the obvious one, right? So Hertz in the news here today. They did kind of pre-announce their earnings, which was cool because at the same time they said, we're going to sell off 20,000 of our electric vehicles, the Teslas that they have. And to take it a bit further than to just read a headline for you, what does that mean? What's the thought process there? Let's say you like Hertz, or you're considering a purchase if it falls or for whatever reason. What's the thought process? All right, they're getting rid of 20,000 vehicles. Well, a company has the ability to rapidly depreciate the vehicles that they have, so long as they keep them through their useful life as according to the IRS. Not the car's useful life, but the IRS table's useful life. Hertz is going to sell those cars sooner than the end of their table useful life, right? It's just that's what they're doing. So therefore, the depreciation that they took as a tax benefit to them, some of that's going to have to go back to the IRS. Hertz is not in the business of giving money to the IRS, so they're like, what are we going to do? Well, they figured out how to essentially recoup that cost. So they're going to sell off all these cars, presumably at some level of a discount. I don't know. I haven't looked at them. And they're going to have to recapture about $250 million in depreciation that they previously got there. And so what they're going to do is, by buying internal combustion engines, I'm not saying this is a dig against the green energy. I don't know why they're making this change. But by doing that, they'll be able to get that depreciation in addition to the cost savings that they mentioned, not me, of running an internal combustion engine versus an EV. They found that that's a little bit more costly there. And so by doing that, they said by the end of next year, we will have made this a wash of a transaction, okay? In the meantime, yes, they do have to take, it's not a charge off. It would, on a balance sheet, you'd call it a write down. So they do have to take that hit, and that is why you see that moving lower there. So that's kind of a little bit more detail than you will see on, I don't know, TV or whatever. You read headlines or whatever it is you do there. Apparently, you guys with the Netflix, they have the multiple levels now. They have an ad-supported tier, and they say that's going really, really well. So obviously that's helpful to their bottom line. And what's most important there, if they can bring in a few more dollars, they can produce more stuff. Remember, money comes in, they produce stuff, you see it, you sign up. The money comes in, they see it, they produce stuff. It's a very costly business. And so having a partially, ad-supported level there and seeing strength in that, people are like, I'll watch an ad. Aren't we just, it's not like back to just regular TV then at some point? Everybody ever wonder that? All right, KB Homes reported earnings there. I didn't get a chance to dig into it. I did see brief scan. Just save it. Okay, so what's interesting in the home builders is orders. And that one stuck out because it was 3 digits rather than 2. Home orders, total home orders, up 176% compared to last year. All right, that's pretty good. If you ask me, the prices already reflect that, but that's nice confirmation if you happen to own the stock. And then this came out a little bit later here today. Alphabet laying off a bunch of employees. Didn't seem to affect the stock all that much. Not really that big of a deal. Tomorrow is the big fireworks, right? It's kind of the start of earnings season, at least the interesting start of earnings season. So we've got Bank of America, BlackRock, Bank of New York. It's going to be the big banks. Citigroup, JP Morgan, and Wells Fargo. That's not it, though. You have Delta Airlines and United Healthcare. They're going to be coming out as well. So it's going to be one of those days where there's a lot to focus on in the morning. By the way, all of this comes out in the morning. So once this is all done, maybe the market gets into, weekend mode or something like that. Your best, we already talked about this, but in terms of being positive on earnings day, Bank of America has the best track record at the moment. The last 8 earnings reports, when they report in the morning, the last 8 times it has been higher on earnings. So you could just look over here and go, oh, it was higher on earnings, each one. So 8 of 8, there's not any one that's better than that in terms of the banks. The rest start to tie there. By the way, I'd like to point out United Healthcare. They've got JP Morgan in the bank space there. Got a little bit of a streak going there. 5 of the last 8 positive, so all is good with that. And that's basically it. That's basically it. If you have some questions, I'll take your questions here, as long as they're not revolved around Bitcoin. Because I don't care, right? Please tell me you guys aren't falling for that stuff. I could tell you so many horror stories of clients that said, I'm just going to buy a little bit, and now we're locked up in some lawsuit or something, or have drastically seen their value decline there. A little bit crazy. We talking Madison, Wisconsin there? Madison, Wisconsin. Been there. I've been there. Camp Randall Field, man. Camp Randall Stadium now, I think they call it. I love it there. You guys seeing hours being cut as well. I don't spend a lot of time, I think, on this, but so we have clients like spread all over the country, really. And there's all these themes. Like you'll see something come in and you're like, oh, okay, I see a little bit of a pattern going on. You know, job cuts, hours being cut, or just flat out layoffs is just peaking up a little bit, just a touch, nothing too crazy there. Monopoly money, I know what you're talking about. Yeah, you're talking about some Bitcoin there, but like I said, as long as it's the bigger, better fool theory. So if you're of the right age, then you know what I'm talking about there. The bigger, better fool theory. Raytheon, what's the question? Oh, looking good here. So let's see. So if I don't know if you own it or whatever, but this is that. I'll say like this is like that glass half full, half empty area, right? So you notice there's not really much progress at the same area where there wasn't much progress before, because all the technical traders are like, hey, if we could just get over this, we have room for what they call the gap fill. They like to see that stuff, and there's no statistic that says that that's accurate, where they say every gap gets filled at some point. No, it doesn't. No, it doesn't. That's a horrible thing to say. But nonetheless, we're in that area where there's no decision to make. It's a sit on your hands moment. You know what I mean? Yeah. Thoughts on the tech stuff like NVIDIA and Google and stuff. So this morning started with that beginning of the year action where it was like, okay, we're going to go sell off the big tech stocks and go put the money elsewhere. And that was the kind of pre-market activity. And then, of course, inflation changed things a little bit. So I think it's hard to chase the value of something like an NVIDIA. It's, to me, a pullback stock. Not saying you can't participate, but definitely I just wouldn't chase it. Right? I don't know what to say. Opinion on Celsius. So help me out with this. Like, what do you do? Are you owning it? Do you have like some kind of a profit, a loss? You waiting? You like the idea of earnings? Give me something here, because for me, this is first of all, you probably know this, but this is not a stock that moves in a straight line, right? See this here? All this is very normal. So the choppiness, the volatility, you would say, on a day-to-day basis, I'm sure you're comfortable with. You have to blur your eyes a little bit and go, in the short term, that's in an uptrend. But second by second, I don't want to stare at this thing. This is a little bit wild. So in that case, if you're looking to buy it, what's the risk relative to the reward? That could be a whole class. We should do a whole thing on this at some point. If you bought it here, the reward is not a multiple of the risk. So it doesn't matter what the opinion is on the stock. You go, well, for this price, I need it to go to all-time highs in order for it to be worth the risk that I have to take. And I have a feeling people aren't measuring that one there. Question, what's your sense for 2024? Bearish, bullish, high level? Just curious if you're able to comment. I'm a stats guy, so I would go with the stats. You know, final year, presidential election year, the current cycle that the stock market is in. I would say this is a slightly bullish year based on all that, because I can't fight the data, you know, or at least I can't. Yeah. Gus, oh, you believe in a business? I'll tell you what, those Celsius drinks down here, I don't know where you're at, but they are everywhere. I don't know what the throughput is, or meaning if they're actually selling any. I'm sure they are, but yeah, cool. Run the handy little history tool. Oh, we've done it. Yeah, we've done it. We've got the whole presidential year thing and all of that stuff. I actually used it today when I was talking to a client. We were comparing the market versus another investment they were considering, and I was like, as long as you're comfortable with that investment, that's a better thing to do, not the stock market. You were looking at the right thing there. So that was kind of fun to be able to use that. I like it. All right, well, Cody's got his $10 there. A little bit, there's not much. He's obviously happy with that. We'll be back later. I'm going to do Wine and Wealth tonight. So if you're really, really close to retirement, or you're about to pull that trigger and you're one of our clients, of course, or in the research site, we're going to go through that, right? Very emotional time. I know that from experience, not personally, but working with people. So I'm just going to go through. What do we need to know? What is best case, worst case, and what's the actual things that we need to be looking at? And by we, I mean me. But I'll show you. We'll go over all kinds of examples. I'll wish you, the rest of you, a good rest of your day. Careful with that weather that's going through there. And let's enjoy the bank earnings tomorrow. All the excitement. Adios.